In the UK, the farmers are protesting. 20,000 of them gathered in Whitehall last week, undoubtedly more to follow in the weeks to come. They are specifically focusing on Labour's recent budget proposals. But, according to many, these were really just the final straw for an essential industry that has been undervalued and put under increasing pressure over the years. So let's take a look at what's happening and why, and what's the potential answer that right now neither side is currently much talking about. So, let's start with the catalyst for the demonstrations. In the recent budget, the Chancellor Rachel Reeves announced a change to inheritance tax relief. Inheritance tax is what the state charges you on the estate of a newly deceased person. If the estate is below the threshold of £325,000, you pay nothing. If it's more than that, the part that's above the threshold is taxed at 40%. As with all taxes, there's a few more complications than that, but the key principle is really all you need to know for this topic. Up until the budget, farms were eligible for APR, standing for Agricultural Property Relief. Basically means that family farms would be passed down from parents to offspring tax-free. Why, you might ask? Well, that was because although the land and the farm equipment might be valuable in its own right, farming is tough work and often not especially financially rewarding. So to encourage people to continue to farm the land, to encourage their offspring to see it as viable for them to follow in their parents' footsteps, inheritance tax was not levied. But that has now changed in the budget. So from 2026, the tax relief will only apply to the first £1 million of the value of the farm's assets. But everything over that level will be taxed at half the normal rate, so at 20%. That can be paid in instalments over 10 years, interest-free rather than immediately, as with other inheritance tax. Seen in isolation, this tax change is obviously a bit of a blow to farmers, so you'd expect them to be unhappy. But, well, you might say, and of course some are saying, that's life. There's always winners and there's always losers from any budget. So this time one of the losers is farmers and landowners. And according to the government, the vast majority of farmers will be totally unaffected by the measures anyway, thanks to that £1 million cut-off limit. So the victims are the tiny minority who can afford to pay. They'll complain about it, but no doubt the changes will be brought in, and after a while it'll just be one of those things, and everyone will have forgotten. Minor earthquake, no casualties. Except for three things. One is that it's suggested that the government has got its figures wrong, and the measure will affect a lot more farmers than it says. Two, the farming sector has already suffered numerous setbacks and blows in recent years, so it's not unreasonable to see the sector as being close to breaking point. And three, there's a very real problem eating away at farming right now that this budget measure could have addressed, but doesn't. And it's a problem that's going to keep getting worse unless and until it's addressed. Let's do those in order. Now, I've said before that as a floating voter in the United Kingdom, I always hope for the government of whichever political colour to do well, because it's better for the country. Most of all, therefore, I want my government to demonstrate competence and due care and attention when legislating. One key measure of that, you would think, would be getting your numbers broadly right. I mean, sure, there's always some uncertainties, but broadly right, for something that matters, like this. The Chancellor, as I said, argued that this change would only affect a tiny minority of farmers, say about 500 per year. This figure was based, they said, on the number of actual claims received by HMRC, the tax collector, for APR tax relief. But, says the National Farmers Union, that completely misses out the fact that the new tax is based on the value of both the land but also the other business property. For instance, farm machinery. Well, a combine harvester alone can cost up to £500,000. So if you include both of those elements, many more farms cross the £1 million threshold. If you look at the government's own figures in that scenario, you come up with the significantly different number of 66% of the UK's 200,000 farms being caught, 75% of specifically Britain's commercial family farms. That, of course, is a massive discrepancy. Frankly, if it's true that the government failed so dismally to correctly evaluate the impact of its own change, that would be a huge strike against them on my principle of competence. But I say if it's true because the government right now, at the time of shooting this video, is sticking to its guns, so it's claim versus counterclaim, which will kind of make it worse if it turns out the government's wrong and the farmers are right, because everyone makes mistakes, but refusing to correct mistakes when they're pointed out, that is an actual character flaw. For farmers that do get hit, the choices are likely to be difficult ones. The majority of farms don't make enough money year to year to pay the potential inheritance tax bill even over 10 years without selling off some of their land or their business. And of course, every part you sell, you lose as a contributor to having a viable business year to year. And that brings us to the second point, the current fragile state that farming is currently in. In recent years, farmers have been hit in numerous ways. Post-Brexit, the UK has been gradually reducing the direct government support that farms get, now that we're no longer part of the Common Agricultural Policy. Farms have struggled with shortages of workers, particularly seasonal pickers and slaughterhouse workers. Increased bureaucracy for imports and exports has led to higher input costs, problems with exporting their own produce, and other assorted extra red tape. 3/4 of farmers, both arable and livestock, told the trade journal Farmers Weekly that the impact on them since Brexit had been negative. And then add to those rising costs the fact that since Russia invaded Ukraine, energy costs have been a lot higher, along with lots of knock-on effects onto prices charged by suppliers, who are also facing those high energy costs. In the last few years, adverse weather has been more extreme than usual, particularly with flooding becoming a real problem. 1,695 millimetres of rain fell in England from October 2022 to March 2024, which is more than for any equivalent 18-month period since data started being collected back in 1836. So last year, 2023, those floods wiped out crops in some areas, leading to a 13% drop in farm output overall, which turned into a 19% drop in income. The situation this year is hardly much better. Last month, one market gardener, Phil Collins, told the BBC, "There is not going to be enough food grown in this country if things go on like it is." He added, "It's been difficult. We had 3 inches of floodwater last Monday, and it really messes yields up. It's the first time in my entire life that we have not had enough spuds out. We've normally got quite a lot of spuds," that's potatoes for American viewers, "in the farm shop, and we don't have any to sell." That was last month. Just this weekend, let's just say that theme has continued, thanks to Storm Bert. Having a bad year is an occupational hazard in farming, of course, but having 3 in a row is a different level altogether. And obviously farmers who don't get the privilege of crossing their fingers and hoping climate change isn't a thing are concerned that this will become, if not necessarily the new normal, certainly a more frequent circumstance. So they have to plan how they will cope with that. And the answer inevitably comes down to investment of one sort or another. Where does the money for that come from? So you take all of that, plus the fact that yes, farming is still hard work. Farmers often working more than 100 hours per week. So you can understand why many would be saying that this is not a good place to be, not if you value food production in your own country. Increasing numbers of farmers are giving up. Their offspring are making the rational decision not to carry on the family tradition, or the farms are just plain going bust. Currently, the UK produces 60% of its own food. What will that figure be in a decade? And that's without one other factor, which brings us to the most crucial point 3. Quite a bit of farming land is being bought up and made unproductive. This comes from a basic principle of life. Every tax ever introduced by a government ever in history, probably, intended, ended up creating unintended consequences. In the UK, the fact that farming land was exempt from inheritance tax made it an extremely attractive proposition to wealthy non-farmers who wanted an investment that would be protected from inheritance tax. New government data suggests that 1/3 of the farm estates affected by government changes are not owned by farmers. They're held by investors for tax planning purposes. So people buying farmland, making it unproductive as a tax dodge. This is also not helping the UK food production mission, you might conclude. Now, you would think at least the government bringing in inheritance tax for farms would reduce the incentive for those people. And it's true, but only up to a point, because it will still be taxed at half the normal rate, so it remains advantageous enough to still be an incentive. So you might argue that Labour's tax changes in this instance are the worst of all worlds, hitting already struggling farmers, a massive tax blow that may make them unviable, while at the same time still incentivising wealthy individuals to take land out of use for tax planning purposes. Shouldn't be beyond the bounds of possibility to come up with a solution that would actually hit the real problems without the collateral damage. Right now, the government isn't even talking about that, and the Farmers' Union is just saying, don't change anything, so it isn't talking about that either. Dan Needle of Tax Policy Associates put forward one suggestion. You should, he said, protect real farmers with a complete exemption from inheritance tax, subject to a much larger cap. He suggests £20 million. But if a farmer's heirs sell the farm or part thereof, at that point the government claws back the exemption. So you can leave a working farm to heirs to continue to farm it. But if they decide to cash out instead, then it becomes a normal bequest, handled the same as for everyone else who has left what is effectively a cash amount. This, at a stroke, removes the cost to farmers who want to keep farming. It removes all incentives for mere tax planning, since you can't realise the value of the assets without attracting the same inheritance tax as you'd get for any other asset. And according to Needle, it would still raise about the same amount for the Treasury whilst doing so. Now, that may or may not be true when you get into the detail. The fact is that the measure was only calculated to bring in an extra £500 million per year anyway, which is peanuts in government revenue terms, was arguably never enough to justify something that causes this much difficulty to people on whose product we very much depend. For example, natural variation year to year. This year is likely to see £300 million more than forecast coming into the Treasury from inheritance tax. There are certainly some in the governing Labour Party who have been asking, was it worth it, kicking this hornet's nest for such a small benefit for Treasury? Now, Not everyone thinks like that, of course. A number on the left are praising Labour's move, and they dismiss farmers as rich landowners who frankly deserve everything they get. The Guardian newspaper, for instance, so editorialised, and one of its long-standing star columnists, Will Hutton, put it starkly. He celebrated that the larger estates would be obliged to sell parcels of land to pay the tax, which he said would then be snapped up by eager young farmers who have increasingly been crowded out of the market. Inheritance tax, he says, is morally right. And he said this: the principle should apply to all estates and to everyone. It is fair. It limits the entrenchment of wealth and privilege. It breaks up monopoly, especially of land. It enlarges the tax base. It gives the next generation a chance. Any other argument is the special pleading of plutocrats and should be seen as such. Which kind of brings us back to the question of the numbers. In other words, how many farms will these changes actually affect? Is Will Hutton right that it will only be the plutocrats at the top end? Because I have to say, I see some of the stories of farmers who certainly believe that they will be affected, and they don't fit that description. Personally, I find myself drawn to Dan Needle's solution, at least in principle. Of course, the devil always lies in the detail. Maybe his proposal will turn out to have a sting in the tail of its own, but it is at least an attempt to identify the real problems and to find solutions that don't strip the countryside of farmers, whether by action or by inaction. Of course, you could push the discussion wider. Some people say just abolish inheritance tax overall. It is, they argue, an iniquitous tax because all the wealth that is being transferred has already been taxed once when it was earned as income. Something to be said for that argument as well, but in the short term, there is a very focused debate raging, and it's going to be resolved one way or another without going that large. Right now, at the point of shooting this video, it seems likely the Chancellor is geared up to tough this one out and to ignore all complaints and just press ahead. You can never tell in politics, but she will own the consequences if that is the case. I hope they won't be as bad as right now it seems that they might be. That's how it all seems to me. What do you think? Let me know in the comments below.